In the world of managerial accounting, traditional methods have long been the backbone of decision making and performance evaluation. However, as businesses face increasing complexity and competition, the need for more dynamic and comprehensive accounting approaches has become apparent. One such approach is modern throughput accounting, which integrates the theory of constraints and focuses on bottleneck analysis and optimization to create a robust decision making framework. This article delves into the principles and applications of MTA, exploring how it transcends traditional accounting methods to drive business success. Understanding modern throughput accounting. Modern throughput accounting is a managerial accounting approach that emphasizes the importance of throughput, which is defined as the rate at which a system generates money through sales. MTA is rooted in the theory of constraints, a management philosophy that identifies and manages the limitations or bottlenecks that hinder a system's performance. The primary goal of MTA is to maximize throughput while minimizing inventory and operating expenses. This is achieved by focusing on the following key metrics. Throughput, the rate at which the system generates money through sales. Investment, the money tied up in the system, including inventory, equipment, and facilities. Operating expense, the money spent to turn inventory into throughput, such as labor, utilities, and overhead. By prioritizing throughput and managing constraints, MTA aims to optimize the overall performance of the system, leading to increased profitability and better decision making. Theory of constraints integration. The theory of constraints is a critical component of modern throughput accounting. Developed by Dr. Eliyahu M. Goldratt, TOC posits that every system has at least one constraint that limits its performance. By identifying and managing these constraints, organizations can unlock their full potential and achieve significant improvements in throughput and profitability. TOC consists of 5 focusing steps. Identify the system's constraints. Exploit the constraints by ensuring they are fully utilized. Subordinate everything else to the constraints, aligning all non-constraint resources to support the constraint's throughput. Elevate the constraints by increasing their capacity if necessary. If a constraint is broken in the previous steps, return to step 1 and identify the new constraint. By integrating TOC into MTA, organizations can focus their efforts on the areas that have the greatest impact on overall performance. This targeted approach allows for more efficient resource allocation and better decision making, as managers can prioritize improvements that directly address the system's constraints. Bottleneck analysis and optimization. A key aspect of modern throughput accounting is the identification and management of bottlenecks. The bottleneck is a resource or process that limits the throughput of the entire system. By focusing on bottlenecks, organizations can optimize their performance and maximize their throughput. MTA employs various techniques for bottleneck analysis and optimization, including drum buffer rope, a production scheduling methodology that synchronizes the flow of work through the system based on the bottleneck's capacity. The drum sets the pace, the buffer protects the bottleneck from disruptions, and the rope ensures that non-bottleneck resources are subordinated to the bottleneck. Time buffer management, a technique for managing the buffers that protect the bottleneck from variability and disruptions. TBM monitors the consumption of buffers and triggers corrective actions when necessary to ensure that the bottleneck remains fully utilized. Capacity-constrained resources management, a process for identifying and managing the resources that have the greatest impact on the system's throughput. CCR management ensures that these resources are fully utilized and that their capacity is increased when necessary to elevate the constraint. By focusing on bottlenecks and implementing these optimization techniques, organizations can significantly improve their throughput and overall performance. MTA provides a structured approach for managing constraints and driving continuous improvement, enabling businesses to stay competitive in an ever-changing market. Decision-making framework. Modern throughput accounting offers a comprehensive decision-making framework that guides managers in making informed choices that align with the organization's goals. This framework is based on the principles of TOC and focuses on maximizing throughput while minimizing investment and operating expenses. The MTA decision-making framework consists of 4 key elements. Throughput accounting, MTA emphasizes the importance of throughput as the primary measure of success. By focusing on throughput, managers can make decisions that directly impact the organization's ability to generate revenue and profit. Throughput per constraint unit, TCU, is a metric that measures the amount of throughput generated per unit of the constraint resource. By prioritizing products or services with higher TCU, organizations can optimize their throughput and profitability. Investment and operating expense analysis. MTA considers the impact of investment and operating expenses on overall performance. Managers must evaluate the trade-offs between investing in additional capacity and reducing operating expenses to maximize throughput. What-if scenario analysis. MTA encourages the use of what-if scenario analysis to evaluate the potential impact of different decisions on throughput, investment, and operating expenses. By simulating various scenarios, managers can make informed choices that optimize the system's performance. By applying this decision-making framework, organizations can make better choices that align with their goals and drive long-term success. MTA provides a structured approach for evaluating alternatives and making trade-offs, enabling managers to navigate complex business challenges with confidence. Benefits of modern throughput accounting. Implementing modern throughput accounting offers numerous benefits to organizations, including improved profitability by focusing on maximizing throughput and minimizing investment and operating expenses. MTA helps organizations increase their profitability and financial performance. Better resource allocation. MTA's emphasis on managing constraints ensures that resources are allocated efficiently, reducing waste and improving overall productivity. Enhanced decision making. The MTA decision making framework provides managers with a structured approach for evaluating alternatives and making informed choices that align with the organization's goals. Increased agility. By identifying and managing bottlenecks, MTA enables organizations to respond quickly to changes in demand and market conditions, improving their agility and competitiveness. Continuous improvement. MTA's focus on constraints and bottlenecks drives continuous improvement, as organizations constantly seek to elevate their constraints and optimize their performance. Simplified accounting. MTA simplifies the accounting process by focusing on a few key metrics, reducing the complexity and overhead associated with traditional accounting methods. Alignment with Lean and Six Sigma. MTA aligns well with other continuous improvement methodologies, such as Lean and Six Sigma, enabling organizations to create a comprehensive approach to performance optimization. Implementing modern throughput accounting. Implementing modern throughput accounting requires a focused and structured approach. The following steps can guide organizations in successfully adopting MTA. Educate and train. Provide education and training to managers and employees on the principles and techniques of MTA, TOC, and bottleneck management. Identify constraints. Conduct a thorough analysis of the organization's processes and resources to identify the system's constraints and bottlenecks. Establish metrics. Define the key metrics and establish a system for measuring and monitoring them. Implement optimization techniques. Apply optimization techniques, such as DBR, TBM, and CCR management, to manage constraints and maximize throughput. Adapt decision making. Integrate the MTA decision making framework into the organization's planning and decision making processes, ensuring that choices align with the goal of maximizing throughput. Continuous improvement. Foster a culture of continuous improvement, encouraging managers and employees to identify and elevate constraints, optimize processes, and drive performance. Monitor and adjust. Regularly monitor the system's performance, identify new constraints as they emerge, and adjust the implementation of MTA accordingly. By following these steps and committing to the principles of modern throughput accounting, organizations can successfully transition from traditional accounting methods and unlock the full potential of their operations. Challenges and considerations. While modern throughput accounting offers significant benefits, organizations must also be aware of the challenges and considerations associated with its implementation. Resistance to change. Transitioning from traditional accounting methods to MTA may face resistance from managers and employees who are accustomed to the old ways of thinking and operating. Data availability and accuracy. MTA relies on accurate and timely data to measure throughput, investment, and operating expenses. Organizations must ensure that their data collection and reporting systems are robust and reliable. Integration with existing systems. Integrating MTA with existing accounting and ERP systems may require significant effort and resources, particularly if the systems are not designed to support throughput-based metrics. Short-term versus long-term focus. MTA's emphasis on maximizing throughput may lead to a short-term focus, potentially neglecting long-term investments and strategic initiatives. Organizations must strike a balance between short-term optimization and long-term sustainability. External reporting. MTA's focus on throughput, investment, and operating expenses may not align with traditional financial reporting requirements, such as GAAP or IFRS. Organizations must ensure that they can translate MTA metrics into the required reporting formats. Skill development. Implementing MTA requires a new set of skills and knowledge, particularly in the areas of constraint management and bottleneck analysis. Organizations must invest in training and development to build the necessary capabilities. Despite these challenges, the benefits of modern throughput accounting far outweigh the costs for most organizations. By addressing these considerations proactively and committing to the principles of MTA, businesses can successfully navigate the transition and reap the rewards of improved performance and profitability. Conclusion: Modern throughput accounting represents a paradigm shift in managerial accounting, offering a powerful alternative to traditional methods. By integrating the theory of constraints and focusing on bottleneck analysis and optimization, MTA provides organizations with a comprehensive decision-making framework that drives performance and profitability. The benefits of MTA are clear: improved resource allocation, enhanced decision-making, increased agility, and continuous improvement. However, implementing MTA requires a commitment to change, a focus on education and training, and a willingness to adapt existing systems and processes. As businesses continue to face increasing complexity and competition, the need for innovative and effective accounting approaches will only grow. Modern throughput accounting offers a proven path forward, enabling organizations to unlock the full potential of their operations and thrive in the face of challenges. By embracing the principles of MTA and committing to continuous improvement, businesses can position themselves for long-term success and remain at the forefront of their industries. The future of managerial accounting lies in the adoption of dynamic, throughput-focused approaches like MTA, and organizations that recognize this fact will be well equipped to navigate the challenges and opportunities of the modern business landscape.